There was some worried people about the drop. Gold had almost hit 4,400, and they're talking about that big drop, and maybe it's going lower, which of course is what happens in a bull market. You get these violent sell-offs to scare people out. But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. Yes, we've traded below. We haven't traded below 3,900. The lowest I've seen gold was in the lower 3,900s, 3,920, 3,930. And it's gotten above 4,000. I think it got to 4,020, 4,030 this week. It's been hanging out at that area. This is very similar to the way gold behaved when it first broke through 3,000. Yes, it wasn't a line in the sand where gold didn't go below 3,000, but it didn't go much below 3,000, and eventually it took off and then went above 4,000. I think we're doing the same thing now. I think we're forming a base right around 4,000, and before you know it, we'll be at 5,000.
Peter Schiff points out that the recent volatility in gold is nothing unusual for a robust bull market. In fact, it's part of the process. After nearly touching $4,400 per ounce, gold's pullback toward the $4,000 level has shaken out some weak hands. But Schiff emphasizes that this kind of correction is healthy. Gold hasn't traded below $3,900, showing strong underlying demand and solid support near current levels. He compares today's price action to the last consolidation phase, when gold briefly dipped below $3,000 before launching into the next leg higher. The same pattern appears to be repeating, with a new base forming around $4,000, setting the stage for the next breakout toward $5,000 an ounce. Sooner than many expect. Like, share, and subscribe for more market insights and analysis.
Since gold was, I think, 3,600, 3,700. Since silver was 40. A lot of these stocks are back down to where they were when silver was 40, even though it's 50. And they're just so scared because, well, it was 54, so it's going down. So what? It was 54 for like a day. I mean, if you took that 1 week out, we'd be at the highs, right? I mean, where we are right now is, a month ago, this would be record highs for gold and silver a month ago. Yet there's so much bearishness among investors. And there's not nearly enough bearishness among crypto investors. They're completely complacent. They're happy as clip. They're not worried at all that Bitcoin is going down. They think it's on sale. Hey, it's $100,000. It's on sale. On sale, you're buying nothing and you're paying $100,000. The sale is on gold and silver. And where the sale is whatever you would buy if you just sold your Bitcoin up here. But people don't want to sell it so much that they're going to borrow against it, where they're gonna sell it. It's just going to be sold out from under them at a much lower price than if they just sold it right now. How much the price of gold had risen between the conference a year ago and the conference this past week, and in particular, the gold mining stocks, because it's really a conference dominated by mining stocks. Almost all the exhibitors in the exhibit hall are gold and silver mining companies, with a few others, thrown in there. But the vast majority are mining companies, and pretty much all the attendees invest in gold and silver mining companies in addition to the physical metal. And, given where we were, I expected even more enthusiasm than I saw. Yeah, I mean, I think it was a little bit more upbeat than it was a year ago when there was a lot more despair and frustration. And of course, a year ago was a great time to be buying gold and silver stocks. But I heard a lot of people talking about taking profits, selling. There was some worried people about the drop. Gold had almost hit 4,400. And they're talking about that big drop and maybe it's going lower, which of course is what happens in a bull market. You get these violent sell-offs to scare people out. But the bottom line is gold's $4,000 an ounce. In fact, it closed the week almost right at $4,000 an ounce again. Yes, we've traded below. We haven't traded below 3,900. The lowest I've seen gold was in the lower 3,900s, 3,920, 3,930. And it's gotten above 4,000. I think it got to 4,020, 4,030 this week. It's been hanging out at that area. This is very similar to the way gold behaved when it first broke through 3,000. Yes, it wasn't a line in the sand where gold didn't go below 3,000, but it didn't go much below 3,000, and eventually it took off and then went above 4,000. I think we're doing the same thing now. I think we're forming a base right around 4,000, and before you know it, we'll be at 5,000. But meanwhile, a lot of investors aren't going to own gold for that ride because they're getting shaken out now, money back guarantee. So there's a lot of opportunities right now in the mining space, and they've improved improved significantly over the last couple of weeks as a lot of fear has gone through the market as a result of a correction that barely reduced the price. We corrected to 4,000 gold, not from 4,000. And silver has corrected and it's almost 50. So it's a very, very strong market, and the strength is being greatly underappreciated, even by the diehard gold bugs and silver bugs. And so when you have that kind of skepticism among the true believers, just imagine what you got out there among the investing public at large.
Despite a wave of fear among investors, the gold and silver markets remain fundamentally strong. Many mining stocks are trading at the same levels they were when silver was $40, even though it now sits closer to $50, a clear sign of mispriced opportunity. Corrections like these are a natural feature of a bull market, not its end. Gold has held firm around $4,000 per ounce, forming what looks to be a solid base before its next leg higher toward $5,000. Meanwhile, sentiment tells the story. Gold and silver investors are nervous, while crypto holders stay complacent, believing in buying the dip at unsustainable valuations. Historically, such sentiment reversals mark pivotal turning points, and this time appears no different. Let's get into the interview.
And I said from the beginning that the Trump tariffs are unconstitutional. I mean, it's really a no-brainer. If you know anything about the Constitution, the power to tax is vested with Congress, specifically the House of Representatives, because all revenue bills have to originate there. And tariffs raise revenue. I mean, and the Constitution refers to tariffs as taxes. That's what they are. And Trump just can't go around slapping taxes on people because, remember, the whole country, taxation was a big part of the American Revolution, right? We didn't want King George taxing us. Well, we don't want the president taxing us either, right? We wanted the representatives of the people. We wanted our own congressmen from our own districts to tax us. And then if we didn't like the taxes, we could vote them out. Every 2 years, all of the House of Representatives are up for re-election. That's why the founding fathers said that's where taxes have to start. If you're going to raise taxes on people, then you're going to go back and explain why you did that to the voters every 2 years. Because remember, the senators were not elected by the people. They were appointed by the state legislatures. So they didn't answer to the people. The president was elected by the Electoral College. He wasn't answering to the people either. The only body that was directly responsible to the people and had to face re-election every 2 years were the House of Representatives. And so our founding fathers said that's where all revenue bills must originate. Originate with the representatives who are most responsive to the people and are going to be held accountable by the very people that they're taxing. So that is the basic concept, right? And the revolution, no taxation without representation. We want our representatives to tax us, because if we don't like it, we can vote them out and get some new representatives to replace them, right? But now Trump is just, throwing all these taxes, and, he keeps saying, we're getting rich. And he, again, on 60 Minutes, and he's telling everybody, and he's saying that if the Supreme Court strikes down his tariffs, oh my God, it's going to be Armageddon, he said. We're finished as a nation. It's a disaster. Like, the whole thing is riding on these tariffs. He said, if we lose these tariffs, we're going to lose trillions and trillions of dollars. It's not trillions, and we're not losing it. We're collecting it from ourselves, right? He still thinks we're getting all this money from China and from Europe. We're not getting anything. These deals that he keeps bragging about, this is all a bunch of nonsense. Right? He's making all these numbers up and pretending we're getting all of this money. We're not getting anything. Yeah, in some cases, foreign companies may be making investments in the United States, but they're not giving us that money. They own the investments. They may be building a factory here that they will own, and the profits that it generates will be going back to the home country. So they're not just writing us a check and walking away. This is all a bunch of nonsense. And of course, I think most of this investment is never going to be made. They're just saying it because that's what Trump wants to hear. And then Trump wants to take it and brag to everybody about these great deals that he's cutting and how much he's making for us, which is also frustrating because you got the Democrats moving to the left, right? And the Democrats, they also won the governor of New Jersey and Virginia, which I guess not that big a shock, right? Those are blue states, although the current Virginia governor is a Republican, so now that one flipped to a Democrat. But the Democrats are becoming more socialistic, but then so are the Republicans. That is going to be a big problem, right? We're not going in the opposite direction. Trump is also a socialist, right? You can say he's more of a fascist, not the way the left tries to label him. If you go back and go to Mussolini's fascism, he described fascism as corporatism. He said it's when the government and corporations work together, when the government gets very involved in corporate America. What is Trump doing? Right? That's exactly what he's doing now. The government is more involved than ever before with corporate America, taking stakes in corporate America, micromanaging where capital should be flowing, which industries should be favored, which industries should get government money, government protection, right? These are all socialist concepts. It's anti-free market. So we've got both parties moving to the left, moving in the same direction, away from freedom and capitalism and limited government towards more of a totalitarian, centrally planned, socialist-type economy.
The debate over tariffs and taxation goes far beyond economics. It strikes at the very core of constitutional principle. What began as a trade tactic has quietly evolved into a government power grab, bypassing the original intent of the Founding Fathers. Tariffs, in essence, are taxes on the American people, and the authority to impose them was never meant to rest in the hands of a single executive. The result is a political landscape where both major parties have drifted towards centralized control. Instead of reducing government influence, the system now rewards intervention, picking winners and losers under the banner of national interest. It's a shift away from free markets and toward managed outcomes. Like, share, and subscribe for more uncensored economic insight and constitutional analysis.